Welcome to my channel. I'm Cryptomina. Thank you very much for joining me today. I hope you're doing well. First of all, let's look into Fear and Greed Index. Today we are 59, which is green, therefore it's still in the greed territories. Yesterday rating was 64, which was slightly higher than today's rating. Today's overall the crypto market is still recovering from the shock of lawsuit on Binance, and there's some rumor going on that the chat between CZ and his executive at Binance have been leaked, and in those chat, some of the allegations are that CZ and his team allowed some banned groups to trade on Binance. These are rumors so far. We don't know what is the truth behind it, so I'm not paying too much attention. But there has been a similar event in the past, so I want to take your attention towards that. So in October 2020, DOJ sued Crypto Heinz of BitMEX, and at that time Bitcoin chart looked like it wants to crash anytime, but it didn't. And what happened was that BTC actually sucked all the liquidity from the altcoins and rallied to 20,000, which was a peak at that time. Will history repeat itself? But thing is that even after all the rumors and all this FUD being created, Bitcoin is still very strong. It is still staying above $27,000. A lot of people were thinking it will dip to $20,000, even go back to $10,000 ranges. It did not happen. $27,000 in my opinion is still a very strong number, and doesn't seem like it is going down, at least at the time of making this video. This is a very interesting tweet that I found. There is a website called stlouisfed.org, and they basically track the price of eggs, a price of dozen eggs, and they started tracking in January 2015 when they started. So if you look at the price of a dozen egg in US dollar terms, it went up 99.5%. So from $2.11 to $4.21, which is 2x. The price doubled in that duration. Now, in terms of Bitcoin, the price went down 98%. From 925,406 Satoshi, it went down to 18,077 Satoshi, which is 98% down. In conclusion, life gets more expensive the longer you hold US dollars, while the life gets cheaper the longer you hold Bitcoin. Let's look at this chart. This is Bitcoin monthly return percentage. It tracks last 10 years, so from 2013 to 2023. If you look at the January was a positive month for Bitcoin monthly return. February was positive, almost like 0%, I will say. And the March, we are towards the end of the March, few more days to go, and we are still positive. So this is a very good start for the year. And if you look at this chart, you will see that there have been 2 years in 2013, that first 3 months, January, February, and March were positive, and then it happened again in 2021. So I want to show you another chart which shows Bitcoin yearly candles, and if you look at the chart actually starts from 2011 instead of 2013, and it goes to 2023, so today, and it shows you the open price, then the high, low, and the close. And if you calculate, and they're basically calculating from the open to close, and if you notice that every year except 2014, 2018, and 2022, the odd years where the return was negative, every other year it was positive. So from the previous chart, we remember that the first 3 months were positive in 2013 and 2021. So if you look at here, so 2013, so from $14, all-time high was $1,242, which is 89 times increase, or 8,743% increase. Now the next year was 2021. So the price in 2021, from almost 29,000, it went up to the all-time high of 69,000. So the return from the open to the close was 59% only. But from the open to all-time high, the return was 2.4 times, or 138%. So now we know the history, like in 2013 what happened, and in 2021 what happened. I know in 2013 the price went up way too much, but in at least 2021, if we are looking at 2.5x, we can expect some good returns in the year 2023. So this was just to give you an idea about what happened in the past and how you can find some patterns. Will it happen again? Yeah, we don't know for sure, but some of these patterns do repeat itself. The last and the final chart I want to show you is the Bitcoin chart, and the blue trend line that you see is a 50-week moving average. And we have recently crossed the 50-week moving average. There were some freakouts, but this week when we close above a 50-week moving average, which confirm that now we are officially breaking that trend line, that was a big moment, because when it happened previously, it has happened 3 times before. And as you can see on the chart, when it happened here, the Bitcoin price went to all-time high and the increase was 21,000%. Next time it happened here, and from here to all-time high, the peak was 75,000% increase. And the latest one that happened here, the price from here to all-time high was 1,100% increase. Now we can guess a little bit when we just cross this 50-week moving average what will happen. I think we can expect something between 400 to 500% increase, keeping in mind that Bitcoin halving is very close. We are 1 year away from Bitcoin halving, and Bitcoin halving is traditionally a very bullish event. So these charts and on-chain data shows that we are in good hand, especially when comparing Bitcoin to the fiat currency, especially US dollar. Now, I want to leave you with this clip from CNN correspondent Zakaria talking about US dollar and inflation and what is his view on US dollar and what's going to happen in the future. I will see you soon. Happy investing.
First, here's my take. The most interesting outcome of the 3-day summit between Vladimir Putin and Xi Jinping got limited media attention. Describing their talks, Putin said, "We are in favor of using the Chinese yuan for settlements between Russia and the countries of Asia, Africa, and Latin America." So, the world's second largest economy and its largest energy exporter are together actively trying to dent the dollar's dominance as the anchor of the international financial system. Will they succeed? The dollar is America's last surviving superpower. It gives Washington unrivaled economic and political muscle. It can slap sanctions on countries unilaterally, which frees that country out of large parts of the world economy. And Washington can spend freely, certain that its debt will be bought up by the rest of the world. The war against Ukraine, combined with Washington's increasingly confrontational approach to China, have created a perfect storm in which both Russia and China are accelerating efforts to diversify away from the dollar. Their central banks are keeping less of their reserves in dollars, and most trade between them is being settled in the yuan. They are also making efforts to get other countries to follow suit. The Biden administration has handled the economic war against Russia extremely effectively by building a coalition of almost all the world's advanced economies. That makes it hard to escape from the dollar into other highly valued stable currencies like the euro or the pound or the Canadian dollar, because those countries are also warring with Russia. What might have been a sharper turning point for the dollar's role was Donald Trump's decision in May 2018 to pull out of the Iran nuclear deal. The European Union was strenuously opposed to this move, but it watched as the dollar's dominance meant that Iran was immediately excluded from the world economy. Jean-Claude Juncker, then president of the European Commission, proposed enhancing the euro's role internationally to shield the continent from what he called selfish unilateralism. The Commission outlined a path to achieve this. It hasn't happened. There remain too many fundamental doubts about the future of the euro itself. Dollar dominance is firmly entrenched for many good reasons. A globalized economy needs a single currency for ease and efficiency. The dollar is stable. You can buy and sell it anytime, and it's governed largely by the market and not the whims of a government. That's why China's efforts to expand the yuan's role internationally have not worked. Ironically, if Xi Jinping wanted to cause the greatest pain to America, he would liberalize his financial sector and make the yuan a true competitor to the dollar. But that would take him in the direction of markets and openness that is the opposite of his current domestic goals. All that said, Washington's weaponizing of the dollar over the last decade has led many important countries to search for ways to make sure that they do not become the next Russia. The numbers are revealing. The share of dollars in global central bank reserves has dropped from roughly 70% 20 years ago to less than 60% today and falling steadily. The Europeans and the Chinese are trying to build international payment systems outside the dollar-dominated SWIFT. Saudi Arabia has flirted with the idea of pricing its oil in yuan. India is settling most of its oil purchases from Russia in non-dollar currencies. Digital currencies might be another alternative, and in fact, China's central bank has created one. All of these alternatives add costs. But the last few years should have taught us that increasingly nations are willing to pay a price when they want political goals to trump economic ones. We keep searching for the single replacement for the dollar, and there will not be one. But could the currency suffer weakness by 1,000 cuts? That seems a more likely scenario. The author and investor Ruchir Sharma points out, right now, for the first time in my memory, we have an international financial crisis in which the dollar has been weakening rather than strengthening. I wonder if this is a sign of things to come. If it is, Americans should worry. I spoke last week about the bad geopolitical habits Washington has developed because of its unrivaled unipolar status. It's even more true economically. America's politicians have gotten very used to spending seemingly without any concern about deficits. Public debt in America has risen almost fivefold, from roughly $6.5 trillion 20 years ago to $31.5 trillion today. The Fed has solved a series of financial crises by massively expanding its balance sheet, almost 12-fold, from around $730 billion 20 years ago to about $8.7 trillion today. All of this only works because of the dollar's unique status. If that were to wane, America will face a reckoning like none before.